Welcome back, folks, to Investor Diaries. In this particular video, we will speak about ARK Invest. Now, ARK Invest is headed by Cathie Wood, and this particular ETF has been in the news throughout the past year and as well as in 2021.
So ARK Invest is an American investment management firm based in New York City that manages several actively managed ETFs. It was founded by Cathie Wood, as Appy mentioned, in 2014. And the company has over $50 billion under assets under management. Rooted in over 40 years of experience, it aims to identify long-term investment opportunities resulting from technological innovations such as robotics, artificial intelligence, energy storage, DNA sequencing, and blockchain technology. By focusing solely on disruptive innovation, they believe they can deliver long-term capital appreciation and performance with low correlation to traditional investment strategies.
So, although this video is specifically focused on their flagship innovation fund,
Which is ARKK, their ARK Innovation Fund.
yeah. However, it's worthwhile to just mention that they have got 6 actively managed ETFs, and there are 2 index ETFs as well. And we'll post a link in the description below where you can go and read more about it.
ARK defines disruptive innovation as the introduction of a technologically enabled new product or service that potentially changes the way the world works today.
So this particular ETF, like all of the other ETFs within the ARK family, it is actually pretty easy to track when it comes to holdings. However, a unique factor about this ETF is that you can sign up for a newsletter, and every single day you will get detailed reports of the equities that they bought and the equities that they sold. In fact, they go one step deeper into telling you the volume of equities that they've sold and bought. So, Nitish, I think that this level of transparency has actually garnered a lot of trust amongst the investors, and they really, really like the style in which Cathie Wood is interacting with the investors. So, very quickly, we'll look at the top 10 holdings of ARK Invest. The top 10 holdings, as you can actually see right now, consists of very interesting companies which Cathie Wood considers as disruptive innovators. It starts with Tesla, and it has a staggering 10% weightage in the entire portfolio. The other big names are Teladoc, Roku, Coinbase, Unity Software, Zoom Video, Shopify, Square, Spotify, and Twilio. Actually, it's interesting to note that because it's an actively managed portfolio and the positions change on a day-to-day basis, it might be possible that tomorrow a particular company which was, say, 6th in the list is 4th in the list. And this is the sheer nature of an actively managed ETF.
So, what does an active ETF mean? In an active ETF, the fund does not track any particular index. Instead, the fund manages buy and sell equities almost on a daily basis. This is one of the ways they try to beat the market. Of course, everything comes at a cost. So therefore, in an active ETF, the MER, or the management expense ratio, is typically higher. In the case of ARKK, it is 0.75%. For more information on MER, we'll include a link in the description below. These prices seem drastic when you consider that the very basic index exposure can cost only 0.03%, which is in the case of an index ETF like a Vanguard S&P 500, ticker symbol VOO, or the Vanguard Total Stock Market ETF, which ticker symbol VTI.
Now let's try to understand the performance of ARK over the years. It was founded in 2014 and it has returned a very impressive 34% over the course of the past 7 years. Now, if I were to split that time period into zones, I would see that from 2014 to 2017, the returns were average. From 2019 to pre-pandemic in 2020, the returns again were pretty average in line with the market. However, there were 2 time frames in which the performance of this particular fund has been staggering. First one was 2017 to 2019, in which it returned almost double of the market, giving its investors 20% year on year growth. 2020 was the best year in the history of ARK Invest without a shadow of a doubt. It returned more than 150% to its investors during that particular year. However, when we switch back to 2021 year to date, we will see that the performance has been fairly lackluster, and we see that the ETF has fluctuated in price in the first 9 months of the year.
So I think that the time phase during the pandemic, that was ARK's stellar growth year. That's when ARK has garnered a lot of attention. And now, especially with the retail investors and the crowds of Robinhood and people, now there's even a moniker associated with the stocks that Cathie Wood invests in. It goes by the name of Wood stocks, and it aligns with the theme of more disruption, innovation, high growth stocks.
Yeah, so Nidesh, if I look at their holdings right now, most of them are extremely overvalued. So, speak in terms of, say, Teladoc, even Shopify, and some of the other names that you see, like Tesla, these are highly overvalued. So, what would you say to our viewers who actually want to consider this particular ETF?
Yeah. So there are three aspects that we would encourage our viewers to look into. The first one is understanding what you buy. As we've been discussing throughout this video, all the stocks that Cathie would typically invest in are disruptive companies. So two things: these companies have high growth potential, and these companies, at least in the short term, could be very volatile in their stock performance. So really understand what you're investing into. The top 10 holdings includes the like of Tesla, Square, Shopify, Teladoc. And all these companies, as we know, has had like a really tremendous 2020. But if you look at the last 5 years, they've had a pretty good amount of volatility. The second point we would talk about is to reevaluate your risk tolerance. Like we said, all these growth companies, disruptive companies are pretty volatile. So it might be good to gain 30% in a short time, but can you actually stomach the losses? Can you actually stomach the loss of 30% in a short period of time? Now, the third point is examine your goal. What is your time horizon? At what point do you look to reap your investment? If you're fairly young, let's say in the range of 20 to 30, and you're holding the stock in your retirement account and you have a good 25, 30 years before you reap the dividends, then this is a fund that you can really tap into. But if you're looking for a short-term return, like you want a performance, you want a periodic performance, you want some sort of an income out of your investments, then maybe the ARK stocks are not the right fit for you.
Yeah, absolutely, Nidesh. And this is totally in line with what we at Investor Diaries believe in. So we'll make it super simple for you folks. If your time horizon is 5 years or more, go ahead and buy the stock. And because it's volatile, so that's why we would say, in fact, keep buying in smaller chunks at frequent intervals. However, if you're saving up for, say, down payment for a house or a car, or if you need money in the short term, definitely stay away because your value can go down.
So that's it for today, folks. Hope you enjoyed this video, and let us know in the comments what your thoughts are about this video and if there's any particular fund that you would like us to explore in the upcoming video. Until then, thanks for tuning in, and stay tuned and stay focused.
Thank you.